Hi, I'm Don Rizzo, president of SunMortgage Company. The lenders will be looking to document your assets. They want to verify that you have enough funds to make the purchase or refinance transaction. They want to verify that you have enough for the down payment, the closing costs, the prepaids, and reserves. The prepaid items are the taxes, the insurance, and a partial mortgage payment. These are actually ongoing costs of home ownership that you happen to be paying at closing. The reserves are the monies left over in your bank after the transaction has happened and are usually equal to 2 times the monthly payment, which is the principal and interest, the taxes, the insurance, and PMI if it's applicable. Please provide the most recent statements for the last 2 months for all accounts: checking, savings, investments, stocks, bonds, 401k, whatever you have. Make sure to include all pages, no matter how long the statement, 1 through the last page. Every single page is important. When the lender reviews your asset documentation, they're going to want to make sure that you have enough funds, primarily, enough of your own funds, and if there are any large deposits, that they can document that these came from acceptable sources. Their concern is that these are loans and may not be allowed in the loan program, or if they are allowed, they have a payment that would affect your ability to afford your new home. Cash, as in dollar bills, mattress money, or money in a shoebox, is very, very challenging to work with in a mortgage transaction. Please do not make any large deposits within the months before a mortgage transaction, as this will pose a very, very difficult challenge for your approval and the people trying to help you get your loan. Gifted funds are allowed to be used as part of a mortgage transaction. However, the gifts are limited as to who they can come from, so please discuss with us where you would be getting gifts. The primary acceptable sources are from parents, siblings, spouses, domestic partners, friends, and coworkers are not acceptable. With gift funds, there are a number of different pieces of documentation. Primarily, there is the gift letter, which describes who's giving it, who's receiving it, how much it is, and where it's coming from. As a part of the documentation process, we need to verify where the funds came from, how they got to you, and documenting the receipt of those funds. The source of the funds can be verified in one of 2 ways. We can get a copy of the donor's bank statement, or if they gave you a check, a copy of the canceled check satisfies that as well. The canceled check is very valuable because it doesn't show the activity in the donor's account, and it doesn't open up any questions about large deposits that may have been made in their accounts. The final part of the gift documentation will be proof that the funds have been deposited into your account, so be prepared to deliver an updated statement or an interim statement showing those funds in your account. Secured borrowed monies are allowed as part of a mortgage transaction. Unsecured loans are not. Secured borrowed funds would include a 401k loan, a loan against a stock portfolio. Unsecured loans would be a credit card advance, a signature loan, or something along those lines. An unsecured loan would be grounds for a declination on most purchase transactions, so please avoid those at all costs.